What's up, guys? Welcome to another episode of your SPY recap. Today's Tuesday, March 16th. I just want to quickly apologize because my last video was last Wednesday. I've actually been traveling. I was out of the country and I didn't get back until early Monday morning. And I ended up taking all of Monday off and today off because I have clinic. But just to recap a little bit of what ended up happening was, this is Tuesday ticker, Monday, Friday, Thursday. When I left you guys off right here, I pretty much said, we're good to go as long as we're above this moving average. In fact, if the next day it would have gapped up like around this level and ran down to test, this moving average, I would have actually liked to have, bought the dip at that level. But one thing that ended up happening was we ended up gapping higher, right? And we ended up breaking out above this level. And then, it actually ended up reversing, ended up closing below the previous high, which was this 394 17 level, which is the high of this day right here, right? So since it was not able to close above it, we still weren't good to go, to higher highs. So in fact, the next day we opened up, at this green support, which was the open of the day prior, right? And um, this day, ran down a little bit and ended up closing right again at the highs of this big candle right here. So this high of the day, if you look at it right here, this high is 394.17. If you look at this high right here, it's 394.21. So it closed right at the high of the next day. If the next day it gaps above this level, above this turquoise line, it's good to go and this will act as your support, right? And what ended up happening was it actually gapped at that level a little above, and it came down to do one last test. And from there, it kissed goodbye and it ran very, very high the rest of the day, right? And once we pretty much broke above this turquoise level, this signal that once again, the SPY is ready to move and it's going to head towards that number of 400. And what ended up happening today was we ended up having a gap, above all-time highs. So we actually ended up gapping above this high. Like I said, it's on the march towards 400. But unfortunately, today, today wasn't, it wasn't a green day. So, the SPY cooled off a little bit, but it's still hanging around and above this turquoise line, which was the previous breakout area. So this 3394 17, 394.20 area, if it manages to come to it one more time, you can expect there to be heavy buying here because this was an area of the prior breakout, right? Because what ended up happening in the market was, I'm gonna go ahead and annotate real quick. Um, the market ended up coming to right here, and then ended up getting rejected far away, right? And for about 2 weeks, we pretty much just saw, a dip. What we thought, if we give up this level right here, the 100 moving average, or even this level right here, if we ended up giving out around this range, this market would have kept dipping, right? But if it managed to find support and it came back to test it, right? And it actually tested for about 3 days, one, two, and then the third day when it opened here and it went below and it closed above, right? So now that we're above this level should act as support, right? And if that level, is given up, the next level is going to run to is this green line right here because this green line has been supporting yesterday's as well as Friday and Thursday's days, right? So if tomorrow we have a gap open, a gap around this level right here, I would say go ahead and let it run to about the 394.20 area and then go along from there. We're now in an up move, so what you want to do is you want to start buying the dips. When we were in a down move, you wanted to go ahead and sell the rips. But now that the market is good and it's going up, um, you're good to keep going up. So uh, I just want to show you guys one thing too about like how I ended up coming up with these lines. And I actually ended up drawing all of these lines on Monday with the exception of this purple line right here because this purple line starts on today's candle. Firstly, this turquoise line was the previous high of the market, this 394 17 level. On the first try, it's going to act as resistance. And in fact, if you go to 311, it actually didn't end up breaking through and ended up breaking, closing below. The second try, again, it could not, right? The third time, it was above it. If we would have closed above this level, it would have been good. And that's what ended up happening yesterday, right? The second line was this green candle, and this green line was actually support for one day, 2 days, as well as resistance here, 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 and almost here. And in fact, um, the fact that we managed to gap at this level meant that this level is very important. This 392.17 level, right? And then the new level that I put was this yellow level right here, which is the high of this candle. And it was about 395.55. And in fact, I ended up picking this yellow line because yesterday we'll go ahead and take a look at the price action, and you're going to end up seeing that there was a reversal at this line. And then lastly, this red line, which was the high of this day, which we ended up making a visit to in the morning, or we're at least about 10 cents away from it before we ended up testing new highs, right? So I ended up coming up with these four lines prior to trading today. So let's take a look to see how the market came out to be um, the last 5 days. So looking at today's price action, which is pretty much everything here, we ended up gapping at this level, at the open of the candle. We came very close. The low right here was 367.72. This line is 367.66. So it came about 6 cents short, before it ran away and it made new highs, right? And in fact, what I'm gonna go ahead and do here is I'm gonna go ahead and add, a line here. And this will right here will be your resistance going forward. And again, this will be your resistance before you run to 400, because we're very, very close. And that 400 number, the closer we get to it, the more of a magnet it acts. And so we ended up coming, and as soon as we came to this level the second time around, we pretty much ended up seeing this sell off. But we saw a quick sell off and a bounce at this level, meaning this level is important going forward. And in fact, it came back down the second time when it ran off kind of strong, and the third time it came through and it broke. It broke through with a lot of acceleration, right? The next level was this yellow one, which unfortunately was not as strong of a level as I predicted it. But this market was heading to 395, which 395 is kind of like that area halfway between this level right here and this other turquoise level. And the reason that's important is because it once it breaks here, it should have ran to this level, but halfway through, the market decided to reverse course and change its mind. So plus one thing is that solid round numbers like 395 usually act as magnets for acting as bounces and support, right? You can even see here this 397 on almost on the penny, acted as resistance. um and so we ended up closing above this level, and we ended up actually closing at this purple line, right? The fact that we're only about 6-7 cents below this purple line, it means that it's kind of a wash. This number will be important moving forward because this was a closeout today, as well as a very important pivot point, during the day. But if we go back and we take a look at the candles that we had drawn from days prior, if let me go back to the daily chart just to show you guys what I mean. So trading on Thursday, when we saw this gap up, the only lines we would have known about would have been this green line, which is this 392.20 level, as well as this turquoise line, right? So this alone could have given you enough to trade with. And so this yellow line came as a result of it trying to break above it, but then changing its mind, throughout the trading day. So if we go ahead and take a look at, 311, in fact, I'm gonna go ahead and put it on 5-minute candles so it's a little easier to see. 1, 2, 3, 4. So this right here is 311. Yeah. So we ended up opening at the green candle. And we came down, we couldn't, and it came down to test the number and it ended up running. And as soon as it broke above this, that's where it ran and it created the high, which is at around this yellow candle. And then once it met its resistance here, it kind of sold off and it ended up closing below this turquoise line, which was the previous high of the SPY prior to then, right? And so this means that this high right here on its next, on its next trading, it's going to act as resistance, right? And so the following day, once again, we opened up at this green line, traded, we consolidated and we ended up trading and we ended up closing at this turquoise line, right? So we ended up closing above the next day. We gapped here. We gave it up, and when it tried to break, it looks like it tried to break. It tried to break here in the morning. It failed. It tried to break a second time. It failed, right? So pretty much the market sold off onto the next level, which was this 392 level. And then from here, when it bounced and it came back a third time, it finally succeeded. And remember, guys, the more times a number is tested as support and resistance, the weaker it is at doing its job. So what that means is that it can't hold down the market forever. It's trying to test it. It's trying to test it. At some point, the sellers are going to have to give up and join the long side. And so it ended up breaking out. And where did it run to? It ran to the same exact number where we made a high on this 311 day, right? So it made a high, and on the first try, again, rejection, right? The second try, it looks like it ended up succeeding in breaking through, and it made this high right here at this red candle. And so this red candle was, like I said, the new high of the S&P 500 yesterday. Today we opened up a little above it. We ran the market. At this point there was more sellers than buyers. We ended up reversing, and once again it pretty much ended up selling off. Not selling off the rest of the day, but it ended up just chopping sideways. And one thing to note too is that tomorrow the Fed is having their open market, meeting, and so those meetings actually have like a very big importance into like determining the direction of the market. And so what's going to end up happening is there's not going to be much volume or much volatility leading up to it, but depending on what you know Jerome Powell says at the meeting tomorrow is going to move the market in one direction or the other, right? He might say something that's very neutral, and so the SPY could easily sell off or keep buying. He's likely not going to be pumping the market as much as when Donald Trump was pressuring him to do so, and so you never know what's going to end up happening. But if you do see a sell-off, expect it to sell off into one of these levels, whether it be the 392.20 level, this 394.10, 394.20 level, this 395.55 level, this new level that was set in yesterday, this 396.66, or even today's high. How would I trade this? Buy the dips and sell at the resistances, and then look to reposition. Remember, cash also is a position in case you don't actually get a trade going. And then if you have any questions, just let me know in the comments. I apologize for not making another video. I'll be making a video today, tomorrow, Thursday, and then I'm going to be once again out on vacation Friday as well as Monday, so I won't be able to make those videos. But if you have any questions, comments, just leave in the comments, and then I'll take a look, and then I'll try to get back to one next video. All right, guys, take care.